Welcome to BizTech's Asian Midday Market Watch. Our guest today is Gabriel Yap, Executive Chairman of GCP Global. Great to have you on the show, Gabriel.
Hey, Brian.
Now, Gabriel, before we get your insights, let's take a look at how crypto markets are performing, and then after that, we'll look at regional markets. Now, Bitcoin is at 39,894. It's down 0.19%, so just under that 40,000 resistance mark. We have Ethereum, which is at 2,426.28. It's up 5.77%. Now, over to regional markets. It's a sea of red. We've got Bursa Malaysia at 1,503.79. It's down 0.6%. The SGX is 3,180. It's pretty much flat. The Nikkei is at 27,337.41. It's down 1.6%. Shanghai Composite is down 0.53% at 3,393.6. The Hang Seng is down over 2% at 2.1%, 25,762.02. But bucking the trend, which is just above unchanged, is the ASX 200, which is 7,417.9. Now, Gabriel, what's the reason for this rather poor performance across markets this morning?
Well, I think, Brian, it's more a divergence between the US market and the rest of the world. I think essentially as the US kicks in the second season or second week of reporting, you can see that the likes of the S&P has hit a new high that's 4,004, hovering around the highs, whereas the rest of the emerging markets, basically the developing markets, basically are making well, not near the highs, but actually are recovering from the wounds actually conducted by the Chinese authorities in terms of basically their latest administrative as well as latest details pertaining to regulation on the education sector, the cyber security sector, as well as the data sector.
Now, I wanted to talk about you just talked about cybersecurity and tech in China, and let's zoom in on that first, because the China Securities Regulatory Commission has done an about turn, has been trying to reassure the markets about Chinese education sector and tech stocks. Can you tell us a little bit more about that?
Yeah, it's actually quite surprising. It was a last-minute conference actually hosted by the CSRC, the China Securities Regulatory Authority, and together with a couple of the big tech players. One is they have mentioned that their clampdown on education does not mean they're impeding the growth of their own homegrown tech sector. I think that's very reassuring after basically so many miscommunication, as well as which then on caused confusion among investors. Secondly, also there was actually some reports that the CSRC actually took out advertisement in the local newspapers to actually assure investors of this. Now, this is actually, wow, like a huge 360-degree turn. I think essentially, if you look further in the pronouncement, I think it is quite clear that, yes, they're moving towards the higher echelon of regulation pertaining to data, pertaining to cybersecurity, but this does not forbid them from allowing companies from China to list in overseas bourses, which is something that the market has associated with after the clampdown on DT, and that was the implication. But it seems that on Wednesday night, when the regulators actually met, and told the investors public, it seems that they're trying to actually make that 360-degree turn on this particular pronouncement.
Okay, and I think perhaps it's, and I was speaking to Vishnu Vardhan earlier this week on the show, and it was perhaps the conclusion that we both sort of talked about is it may have been all with the right intentions, because there are social reasons why they have done this to reduce the burden on the average Chinese family and encourage them to have more children. But I think perhaps you used a hammer to instead of a fly swatter to address the problem.
Well, I would actually go further to tell you that it's actually a sledgehammer approach, right? Not something that we have not seen before in terms of China context, and actually trying to address its fundamental problem. I think the fundamental problem pertaining to the high cost of raising a child is not only just pertaining to education in China, but the sheer competitiveness of this system is there. But of course, to compound on that, you actually have the light of TAL, Gaditsu, as well as New Oriental Education in the those are the listed entities that actually have latched on to this education that's from K-12 education and actually profited handsomely from it, in terms of after tuition hours, in terms of additional workload, and then I think what perhaps could have been something that authorities became quite afraid was that close to the 20 billion raise last year, on the new and upcoming ed tech companies. That means education plus tech companies like Zoye and Yanfu Dang. Now, those raised 20 billion. Can you just imagine that? And they're not even going for public listing yet.
Now, on the flip side of the equation, as you mentioned earlier in the show, that the US tech sector is really humming along. They've most of them have reported stellar earnings. Despite the stellar earnings, people are not happy with the likes of people like Netflix as well as Amazon. So what are your views on the earnings season so far in the tech sector?
Well, it started on Wednesday. I think Alphabet came in fabulous. It posted 61 billion in terms of revenue. Both earnings, margins, as well as revenue were above expectations. Then came Apple. Apple was just not above expectation. Then you actually had Microsoft, which again met expectations, but because of the guidance, which was misinterpreted by the market, the after hours trading actually fell off a bit, but then it recovered. Then you have Facebook. Facebook came in and say that, look, do not expect things to be as rosy as what they have posted, even though they beat the expectations. That led to a sell-off on Facebook in like 4% down. And then yesterday you had Amazon. So Amazon earnings actually met expectations, came in at 7.8 billion. The only thing is that the guidance forward, is the fact that Amazon's, if you look at the earnings call, they're saying that, look, don't look at basically the quarter-to-quarter comparison, but look at the two-year comparison, which have incorporated, the underlying growth of e-commerce, third-party sellers. Those were the numbers with the weaker numbers. Of course, the strong numbers were things like the AWS, which actually posted above market expectation.
Now, Gabriel, thanks again for all your insights.
Thank you.
Now, we've been speaking to Gabriel Yap, Executive Chairman of GCP Global, on BizTech's Asian Midday Market Watch. I'm Fernandez. Check out our various platforms, and thank you for tuning in.